So I talked to actually it was three different people today, and it was about their employment. And they were in completely different markets here in Florida. One of them was two of them were in retail. One of them was like a hourly based retail position, non-commission sales. The other was commission sales, and then the third was in the restaurant industry. And ironically, between all three of them, not knowing that I was engaged in these conversations with different people today, they all shared the same story. They all shared the same sentiment. They all shared the same fear that basically, from what I gathered from them, they are picking up on the trends. They're seeing where the market is going. They're seeing where the economy is going. And ultimately, the effects that inflation is having on their ability to earn income and their comfort level and confidence in their employment status moving forward. And unfortunately, it's sad but true. All three shared concerns that they didn't think that they would actually make it to the holiday season employed and or through the holiday season employed without maybe even some drastic cut in their pay or their hours, or something would have to give, making it more difficult for them to earn their income and pay their bills and afford food and groceries and pay their rent, pay their car note, pay their car loan, pay their insurance, pay their student loans. One of them is still paying student loans, and just be able to provide for their family or families. One of them had a roommate. They were concerned about making their rent. They also share concerns about their roommate and their employment and their ability, where if their roommate lost their job or started making less money, that they didn't have enough income nor enough savings to support them if they couldn't make their rent every month. And it's sad. It's sad. It's true. I'm glad that they witnessed and realized the trends and what could be. But at the same time, none of them were actually prepared for SHTF. None of them were prepared if they lost their job. They all expressed concerns about the future and what they've seen and what they're seeing, what they expect, what they're anticipating. But they all basically came back to, if I lost this job, I don't know what I'm going to do. One of them actually said that they would go back home with their parents, but the other two were not in a similar situation, or at least they didn't express that. Going back home and living with their parents and try to rebound from there was an option. But at the end of the day, inflation's taking a toll on everybody. Businesses are being hurt by not only inflation, by lower wages, by tighter consumer spending, by consumers and shoppers being more conscious of their budgets and allocating funds to the ultimate necessities that are becoming more and more expensive. And one of which was actually a Target employee. And they said that they noticed here recently, especially here in Florida, that in the last week, their traffic and their sales are down drastically, mainly because the tourism is basically over and the school season is starting back up. Kids are back in school, tourism is down, and their traffic is just low. And of that traffic, the people in the stores, the shoppers, they're pretty much only concerned with necessities. And based on what they're seeing, their inventory levels, the excess and surplus of non-essential items, non-necessities just piling up, the discounted prices, the sales, the markdowns, the savings, all that being thrown on these items like TVs, video games, cell phone accessories, some of the clothing and apparel. It's not a necessity. and they still don't sell them. They still don't sell them. And they're really concerned that this trend is going to continue into the fall, that this trend is going to continue, this downward trend is going to continue into the holiday season and basically pull back. On top of, they don't get shipments like they used to. They don't get the shipments that they're expecting when they're expecting them. They're getting shipments that they weren't expecting just showing up from old orders from over a year ago. And they're really concerned about what's going on in their stores and, you know, the conversations that are being had with the managers and things like that. And this one employee at Target was just really kind of scared about the future and the fact that they didn't even really make that much money to begin with. They don't really get that many hours as it is. They're pretty much part-time because Target tries to keep everybody at a part-time level to prevent overtime wages, to prevent the requirement of providing benefits and other incentives for full-time employees. And then one of the others was in the restaurant industry, and they said the same thing. They said the traffic is dying down, which is pretty normal considering the seasonality of tourism in Florida. But they said they've never seen it like this before. They said even the weeks prior, during the height of the tourist season, it was still relatively low in comparison to years past, pre-pandemic years. And they think that, you know, the reduction or the elimination of stimulus checks being pumped into the economy and the low interest rates being out there and available for people to borrow money against, and the businesses not having access to the funding from the government through Paycheck Protection or PPP or EIDL, economic income disaster loans. They think that these are all playing a part in why there's a pullback, why there's less traffic, why there's less tourism, why there's less sales, why there's less customers and shoppers, and ultimately, for this particular person, less tips, because people are just being more conscious and a little bit more frugal, on top of the fact that pretty much every menu item has been increased, on top of standard gratuities being added to tips that customers are not super happy about. And these are things that we've been tracking for like the last few months, and they're all slowly starting to compound and come to a head and really start to show themselves that we've been discussing for months. Some people, you'll know what I'm talking about. You've watched the past videos. We've had comments and gone back and forth. Maybe we've communicated through email or even in the group. If you guys are part of the group, links in the description. But now it's all starting to really come and take shape of all the things that we were talking about. Now we're slowly starting to see, I'm not saying they're all hitting at one time, but we're slowly starting to see more of the pieces of this puzzle come together and, you know, really start to reveal what it's going to look like. And I think it's going to look like a pretty rough fall, pretty rough holiday season, you know, a cold winter. Despite, you know, I think it's the Farmer's Almanac calls for a really harsh winter. I think we're going to see it in the market. I think we're going to see it in business. I think we're going to see it in real estate. And I think that a lot of people are going to come, if they're lucky enough to make it through 2022, they're going to go into 2023 without a job. They're going to go into 2023 with less income, less money that they earn. Their pay is either going to be cut, their job is going to be lost, fired, terminated, laid off, mass layoffs, and or inflation and high interest rates. All of the higher interest rates imposed by Jerome Powell and the Fed are designed to counter all the money pumped out. You know, Senator Minority Leader Mitch McConnell thinks Americans are flush with cash. They don't want to work. They're just lazy because all this money they got from stimulus checks. And then, you know, ultimately they're trying to combat that with higher interest rates to slow inflation and reverse it, possibly cause deflation. And even if you make it out of 2022 still employed, going into 2023, you still have a job. You weren't fired. You weren't laid off. You weren't terminated. The inflation is going to almost make it seem like maybe you have been. You're going to be working for less. And somebody actually asked a question in a previous video in a comment, and they said, hey, look, if we see a reversal of inflation, if we see deflation, will we start to see people's pay cut? Since things cost less, will we see their pay cut since it doesn't cost as much because of inflation? And just to say, yes, we may. We may see some of that through some really, really crappy employers. However, we also got some small businesses out there that are running out of money, if not have already run out of money, and they can't afford to pay their employees, but that's a whole nother subject. But, unfortunately, most people's pay hasn't increased to keep up with inflation. So theoretically, if we see a reversal of deflation, theoretically your pay shouldn't come down, because for most people, most middle class, working class Americans, it didn't go up. So it shouldn't come down. It was already a struggle as it is trying to keep up. But honestly, if we see not so much the Costco and union Teamster worker strike as a big problem, but I do think that if we see a strike occur through the railroad workers union, which is responsible for at least 30% of our supply at a time like this, going into the fall, going into the holiday season, it's going to further compound and put further stress on the industries and the employees that are at greatest risk. And it's going to make the end of 2022 and the beginning of 2023 very, 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 very sketchy. And the confidence in the market just won't be there. And if that happens, if we see that decline, confidence drops, we are going to see a depression, not just a recession. We're going to see a depression because people won't have money, and the people who do have money are not going to spend it because they have zero confidence in what's going on. And ultimately, anything that's out there to buy, purchase, invest in, whatever, most people in these positions that have the ability to are going to look at it as they're paying a premium for something that if they just wait another week, if they just wait another 2 weeks, if they just wait another month, the price is going to drop. People are going to get desperate. Businesses are going to bankrupt. Stocks are going to fall. More cryptocurrency brokerages are going to collapse. Real estate is going to drop. Interest rates by the Fed are going to go up, but mortgage companies are going to keep dropping them so that they can actually get people to go through with mortgages so they have a chance of making some money. Auto vehicle values are going to drop. And as that happens and people see what happens through what this is called demand destruction, they're going to then be further enticed and incentivized to continue to wait longer, because the longer they wait, the further prices drop, coming back to probably pre-pandemic prices or maybe even less. And people are going to be able to scoop up deals in real estate. They're going to be able to scoop up bargains, pennies on the dollar in automotive, particularly the luxury, I think in the luxury and the exotic car market, in addition to the truck market. I think the truck market is going to slide in there right there with the luxury and exotic, because those are probably the biggest vehicles that saw the greatest increase in inflation and markups unnecessarily, especially for the trucks that were bought out of wants instead of needs. The trucks that were bought out of needs for businesses and construction is a little different story. But teenagers riding around, their parents bought them a 3500 dually and lifted it and put 37s on it. It's like, those are going to take a hit. And we're going to see a field day in repossessions and defaults on loans and bad debts. I was at the ATM. Now, you guys saw the video I put up the other day, and I got that old 20 out of the ATM. Well, I made another bank run today. Not like a bank run like that. I just ran to the bank, got a little bit more cash. Mainly because down here you got to have cash, especially if you're going to be going through tolls. And me personally, I like to tip people in cash so that they actually get it. But I went to the ATM and I normally just pull out 20s, but that's a whole nother subject. I'll talk to you guys about that in another video. But the Bank of America, it says, hey, select what values you want. This one, it only let me get 10s. So I'm not saying that the bank's running out of money, but in this particular situation, this ATM apparently only had 10s. Maybe there's some other folks out there getting their cash too, so that they have it just in case we were to see some unfortunate hiccup in the banking system and they wanted to prevent you from withdrawing your funds from the bank, which they're probably running low on, as the banks lend out through it's called fractional reserve banking. As the banks lend out your deposits and leverage them against loans and other investments, only for right now for the banks to witness or realize that a lot of these loans that they've made off of your money, off of your savings, off of your checking account balances are now going to come in late, defaulted, people go bankrupt, and the money that they lent out, they're not going to be able to get back. Now, granted, you have some FDIC insurance up to $250,000. So basically you got a $250,000 insurance policy on your deposits. But at the end of the day, if you go to the bank tomorrow and you need a few $1,000s in cash and they don't have it, and that bank is in dire straits and that bank is in big trouble, and you find yourself in a situation where you need to exercise the rights and the protections that your accounts have through FDIC insurance, it's going to take quite a while for that to actually kick in for you to get it. And by then, it's probably going to be too late.